Welcome back to Upside Down Data. We have to talk about XRP. So XRP has been on an absolutely phenomenal rally since election day. We're currently up over 400%, which is quite impressive given that XRP is not a small market cap asset. In fact, XRP is now the third largest cryptocurrency by market capitalization. No small feat whatsoever, considering the assets it had to flip to get there. It's now larger than Tether, larger than Solana, larger than BNB. A very impressive feat that XRP has been able to pull off. But that's all in the past. Now what we care about is how much further could XRP go in this rally? Or another way of putting it, how can we spot when the top of this rally is in? So I want to look at is data that can tell us when that has likely happened. So what I want to look at is some of our models that we have here on the channel that can be very, very helpful to spotting tops of these kinds of explosive rallies. So the first one I want to talk about is our long-term upside downside potential indicator. This is one of the risk models we have here at the channel. High values mean high risk, low values mean low risk. And you can find these data for yourself at our website, claritydigital.io. Link is in the description. So with this model, what you want to look for is these extreme values really on either side. So when you get to the really high risk points, that suggests that you're probably near a top, that the upside potential that's remaining is not that large relative to the downside potential that exists. And you can see that when you get to these tops, both kind of intermediate tops, mid-cycle tops, and also the cycle top, you'll tend to see these big spikes on the UDPI and the long-term UDPI. And that's exactly what we're seeing right now, a big spike. Now, as I mentioned before, this doesn't mean that we have to be entering into the cycle top. Could be an intermediate top before the final leg up. But it does seem like we're getting into that type of environment where you'd expect a top to form somewhere fairly soon. So that's what we're looking at with risk, that we have more room to go, right? We're not at the top of the scale. There's more upside potential here, but we're getting into that general area where caution makes sense, or at least being very aware of what's going on, being a little bit more discerning, and not being afraid to kind of follow the data if they say the top might be in. So that's kind of talking about the context, and that it does seem like the top is likely to be near at least a local top at the very least. But how can we know what has actually happened? How can we know that the top is likely in for some period of time? So there are two other models I want to talk about here. So the first one I want to talk about is our market direction classifier, or MDC. So basically what you're seeing here, this red line is just the critical level. And really what's helpful about the MDC in this type of environment, when you have an explosive rally, is it can tell you when is weakness actually weakness you should be worried about. So let's take this first leg up we got here in 2017. Big explosive move. There was some weakness that happened here, you'll notice, but the model didn't care about that. The model wasn't too concerned. Basically, the price stayed above the critical level, which basically says that you should stay bullish. But then it was at the top here, when we flipped below the critical level, where that was time to actually get concerned. We did have this long kind of correction consolidation before the final leg up. And then in that final leg up, the same thing happened. We went up, and then it was only really once we got back down below that level that it was very clear that the top was in. So that's something that we can look at now, that as we go on this explosive run, where is the MDC going to end up? Where's this critical level going to end up relative to price? And when we see price break back below the MDC critical level, that's when we might think, all right, the top is likely in, either cycle top or just some mid-cycle top. But at the very least, a top where most likely your funds are better off elsewhere, where there are other opportunities, especially in the parabolic phases of a bull market right now. Instead of just sitting in XRP as it maybe consolidates for a long time, stick that into an asset that might be able to do a 5x or a 10x in that period. Then you can always come back later to catch the rest. So not financial advice, you should make your own opinions, but that's how I think about this. I don't think about the crypto market as just being a single asset. I think about it as being a part of an ecosystem. And you want to be able to catch and ride these explosive moves, but then once they're near their end, either at the actual top or at a mid-cycle top, there are better opportunities elsewhere. So that's one of the reasons why it can be useful to look at that and say, okay, is it maybe better to take some off the top and look elsewhere? So it's one of the models that we can watch that can give us that signal. The other one is our trend confidence indicator, or TCI. So this model is great because it has very distinct behavior at the top of these kind of explosive runs. So actually, let's go ahead and look at it back here in 2017, 2018, and then we're going to go ahead and talk about it as it relates to what's going on right now. So I'm just going to get this into view. So what you'll notice with the TCI is that when you get to some kind of a top, maybe a mid-cycle top, a mid-rally top even, you'll notice that it falls off a cliff very aggressively once the top has happened. So you see it really comes up to a top here, falls off aggressively, comes up here, falls off aggressively. And then over here, it comes up, falls off aggressively right as you get at the top. That's something that we can look at this time. Basically, what the TCI is telling us is that right now it's very clear that we're in an uptrend. You see how high it is? That's just basically saying, be very confident you're in an uptrend right now. But if we see this really fall off aggressively, that would just basically be saying that it's losing its confidence in this uptrend. And generally speaking, that will happen when it's actually at the top. So we're not really there yet, right? So we're seeing that price has slowed down the last couple days. TCI has moved down a bit, but this could just shoot off to the upside again if price keeps going up. What you really want to look for is, does this just fall off aggressively here? If that happens, it's probably likely that this weakness we're starting to see show up here is actually more meaningful. So it's still too early to tell. I'll be watching the TCI closely. That's another data point we can look at. And so I think what's useful about looking at these models together is that the UDPI is telling us that we should be on the watch for a top. Doesn't have to be a cycle top, but some kind of notable top soon. And then the MDC and the TCI can actually tell us when that has likely happened in quite nice temporal fidelity, pretty close to the actual occurrence of the top. They'll be able to identify that it's in. So that's one of the ways that we can leverage data to actually be able to answer this question instead of just guessing. Because what happens when you look at a chart like this and you have no data to rely on, so you're really just guessing where the top might be. You might guess that it still has way more to go. You might guess that the top is in. You don't know. These are objective models that can give us much clearer answers that aren't going to just rely on us guessing or using emotions. So again, not financial advice. You should make your own opinions, but that's what I'm looking at with XRP right now. So if you like the content, remember to subscribe to the channel, give the video a like, and follow us over at X. A lot of updates on our models and more over there. You can go to our website, PolarityDigital.io, to see live data from our models and more.